All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I just want to step in here, talk a little bit about what's going on in the market. This morning on video, I talked about Apple and the setup, and it was a great setup here this morning. I traded it off screen as I was talking with shares, but I ended up taking about a 98 cents, so $1 loss on those shares as my stop triggered out as soon as it went red. But it's something, that type of setup, I'll trade a million times and love it. But outside of a trade, and okay, great, next, it's what's the significance of this reversal in Apple today? And Jim Cramer was on CNBC basically commenting that the market can't go higher without Apple. Same thing we talked about earlier this week, that with Apple, with so many fund managers so entrenched in Apple lower means they have to make other decisions that they may not want to make. It's not just a simple, let's sell Apple, right? And, when you have the Apple supply chain that they do and the economic footprint and impact that they do, it is just something that from a pure market mechanics standpoint, if Apple's dropping and Apple's supply chain, stocks are dropping, then you have a lot of fund managers that are having to really reassess, really kind of take a look at some risk in a little bit of a different light. When we saw the pullback in January, early January, February, Apple pulled back with the market, right? It pulled on back with the market. And then we got, Apple earnings and everything else, and we saw what Apple looked like, and Apple went to a new high. It was, okay, Apple's safe. They're growing going forward. Something different happened here. Apple held up in October. It held up very well in October. Compared to the market, Apple held up phenomenally well. It was one of the top performers. Then they had earnings. They had earnings, and they gapped down on earnings, and rightfully so, and they gapped down big on earnings, and rightfully so. For those that like to argue, well, just look at what the stock does ahead of earnings, and that's the way the earnings gap's going to go, right? Apple rallied $12 in 3 days ahead of earnings, and then gapped down big, right? All those people that knew what was going to happen, yeah, they got burned. But it was one of those where if you look at Apple, what's happening? Well, yes, they're growing, right? But that growth is slowing, right? That growth is slowing, and the expectations are for it to slow going forward. And what's that have analysts doing? It has analysts scrambling, downgrading the stock, downgrade, neutral. I haven't seen a downgrade to sell from somebody who hasn't had a sell rating on them yet. A lot of price target drops, though, and that's helping to push it on lower here. Now, around the 200-day moving average, I expect we'll ultimately get a bounce, and I took a small chance on, okay, is today going to be the bounce? Okay, it wasn't. All right. But it'll eventually have a bounce, and, okay, get the next signal. I'll look to take it and play for that bounce. But overall, we cannot expect that the market itself will go higher without Apple. And, the market's not down big today. It's down 3 points. But, as Apple has rolled, the market has rolled. And if we come back here to Apple and just look at some of the long-term correlation in Apple and the market. And let me just pull it up. And, anytime we talk about correlation, right, we have to remember that correlation doesn't mean causation. I know that's popular to say anytime somebody's talking about correlation. But in this case, I would argue with you that correlation does mean causation in many ways, shapes, and form. Look at Apple and its positive correlation with the market over the last 3 years. Market up, market down, Apple down. And you could argue that Apple's the driver more than the market. We don't have as high a correlation right here, right now, but it is still a very positive correlation here. between the market and Apple overall. If we come back on a monthly view, there was one dip where we saw, well, a couple dips here where we saw Apple in the market not positively correlated and actually go negatively correlated, and that was Steve Jobs, passing, and then back here in the 2008, stuff where Apple kind of outperformed the market, right? And outside of that, Apple has been very positively correlated with the market, and the way fund managers are entrenched in Apple right now, it is something where they've had to be in it, right? It's not like fund managers really had a choice to be out of Apple, right? You have to be in it. It's a top performer. They have some of the top numbers, some of the best valuations. You can't not be in Apple. Right? I'm back in my fund managing days, and back here in 2011, and I'm looking, and I end a quarter without Apple. When Apple's up 10% on the quarter, what am I going to get? I'm going to get a phone call. Why aren't we in Apple? Why aren't we in Apple? Why aren't we in Apple? Right? That's what my phone's going to ring. I have to be in Apple, right? I have to be in Apple. It just isn't. It just isn't much of a choice there, with it. And fund managers have had to deal with that now for quite some time, and they're deeply entrenched in Apple. Now Apple's down 13%. Now they're having to go, gee, all right, do I cash out here? What do I do? Okay, supply chain. All right, what do I do with this? That's forcing them to ask questions, forcing them to reassess some of the risk factors, and can they really be out of Apple? Because year end, Apple's still one of the top performing stocks in the Dow, right? So it creates a conundrum for investors or for money managers that have to deal with that type of thing. And I know not all money managers have to, but you have slowing growth, you have a parade of analysts, and when you start to see that you get some bounce triggers and they can't hold, fund managers are really caught in the crosshairs, and really having to make some tough decisions there with it. For me, Apple's the same thing that it's been. It's a trade. It is a trade. It is something I'm willing to look for buy opportunities down here around the 200-day moving average, but I'm not willing to be married to them. I'm not willing to be in big. I'm not willing to hold on if it starts to move even slightly against me, because there is still there's still some sizable downside risk associated to Apple here, and with this price action, something that we may get a flush, action come in here to Apple, where we might get one of those 100 million days where Apple trades 100 million shares. And that's not going to happen today, barring some sort of news to come out. But I would not be surprised to see Apple get one of those days, those 100 million share type of days, here in the near future, and that really kind of mark a line in the sand, because while yes, Apple up here, when we talked about it up here, as it made this move in August and in September, we talked about it, the valuations just aren't there anymore. It's not a cheap stock anymore. But as it starts to come on down, well, now it starts to get where some valuations start to look intriguing. They're not cheap yet, but they're very different than what they were. I mean, the stock's down 20%. The valuations have shifted dramatically. And so another kind of flush here on it, those valuations may get a little too tempting for many. But fund managers right now, they're still in a sell first, ask questions later type of mode. And so far that just hasn't switched. And it'll switch, but so far it hasn't. You can see the market as Apple's kind of rolled over. The market itself has rolled over. It has broken those CPI levels from this morning. And we saw the algorithms really kind of kick in here. Here with this move, but market down about 5 points right here. Small caps have turned red, Qs have turned red, but you'll notice transports, the IYT, they have held their gains. They have not been sold off. They have really held on here, here today. Now, if you look at, what's driving that, right? Here's the airlines. They're up 0.5%, right? But this isn't, this isn't all airline driven. I mean, we looked at CSX this morning. It's holding its gain. Union Pacific, it's holding a little bit of its gain, but it has reversed on lower. But, then you start coming into some of these truckers, the J.B. Hunts of the world. Some of these stocks we talked about, hey, they should benefit from oil dropping, but they didn't benefit yesterday. They're the outperformers here today. Old Dominion, J.B. Hunt, these truckers here. And I'm very interested if they're able to hold up today, something like a Knight Transportation or an Old Dominion. If they're able to hold up today, if we don't see some of that, some of that logic start to come into the market, where they say, look, okay, yes, this is something that's meaningful. And, it's not just about where is oil and gas today. It's about, okay, just the new levels overall that it's at. And if we start to see some positive earnings revisions for the future, coming out, I would not be surprised to see some analysts over the course of the next week coming out and saying, hey, J.B. Hunt, we're going to up our earnings estimates based on lower cost on fuel. And to see that happen with Old Dominion, see that happen with Knight, or any of the other truckers like J.B. Hunt, is something that I expect that we will start to see. Overall, the metrics here today are very little changed. They have not changed all that much here so far. We'll see where things are at the end of the day. There's still a lot to go, but the metrics are pretty mellow in terms of how they've switched today. But we do see we're starting to see some deeper red come into play with some stocks, and especially in some of the tech sector here. Really kind of coming into play. The banks have reversed. The J.P. Morgans of the world, Bank of America's of the world, they have reversed, and they're giving up yesterday's bounce, which is if you're bearish, that's what you want to see. This is some ugly action in the banks. Failure of J.P. Morgan to hold its gap up today, reversing on down, looking to take out Monday's lows. That's some fairly ugly action, and something that has to be accounted for here. We can look at plenty of examples of see this type of price action and see new lows to come in. We can also see this type of action and see that, hey, the next day it has a big old bounce, right? So it's not, I don't think any of these candle patterns that are out there yet are something that you say, oh, wow, this is kind of a no-brainer, or 80% odds of one direction or another. But it is something that definitely continues to show that there is a lack of real sustained buying yet to come into this market, and there hasn't been a real catalyst here for it just yet. I was asked if we are likely to see some bottoming volume today come into the market, and I responded and I said, we could, but I would suspect not. Bottoming volume in a market tends to come on a day where the market opens up red and sells off, and then finds a bounce area. We didn't have that this morning. The market opened green and rallied and has found a sell area. So to find a high volume bottom on a day like today, or to see that come in, we don't tend to see it as often, really come into play. And so I wouldn't expect to see one today. Obviously we could, right? Anything could happen, but I would not expect that we will see that here. But if we back futures chart out a little bit, this is an interesting level, right? I mean, we've seen the markets dribble on this level every day this week. And, it's bounced off of this level with some pretty hefty bounces and been slapped right back on down to this level here. And, it's something that if it breaks, If it breaks, we're probably talking about some flush action coming in to where the algos really kick in and really sell it. And if it breaks and snaps back quickly, right? It's just okay. Go buy anything. You're going to be good because we're going to 2780. But if it's not able to snap back quickly, that could get very ugly, very, very quickly. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.